some persons are still in the waiting room. Okie dokie. All right, wonderful. So good morning, everyone. Again, we sincerely apologize for the late start. We do live in a virtual space, and unfortunately, we cannot predict everything that would go wrong. So we thank you for your patience, and we hope by the end of the discussion, you would have forgotten all about the 7 minutes. All right, so I am Cora Jane Jude. I am the Director of Business Development and Culture at Symptai Consulting, and I will be your host this morning. So you know what we're here to talk about? We're talking about digital currency and what that means for your business. So we're taking on this topic and the introduction to Jamaica and the Caribbean of the CBDC. Before we start, I want to acknowledge and express our gratitude to the private sector organization of Jamaica and its executive director, Amiga Brees McNabb, for this platform to have this very, very important discussion. As the central bank prepares to launch the CBDC, businesses really need to know, and I'm sure that's why you're all here, because it's very critical for all of us to be aware about what does this mean for Jamaica and how to best position ourselves as individuals, as commercial entities, to optimize on this new revolutionary change in our market. So Symptai Consulting, just a bit about where I work and what we do. We're an IT advisory and IT assurance firm based in Kingston, Jamaica. And the experts that we have on board are equipped to helping Jamaican businesses, Caribbean businesses as well, to remain competitive in this digital reality by, of course, managing and monitoring risks and, of course, leveraging technology. We are also the first and only data privacy trainers in the Caribbean region and certified by the International Association of Privacy Professionals. And of course, you can learn more about us if you visit our website, www.symptai.com. So I'd love to invite to bring greetings the chairperson of the PSOJ and Digital Transformation Committee to bring greetings on behalf of the PSOJ, and that is Mr. Christopher Record. So go ahead, Chris.
Hi, Cora. Thank you very, 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 very much. Welcome, ladies and gentlemen. My name is Christopher Record, and while I wear a number of hats,
yes,
a number of people know me from a wide range of activities. Today, I bring greetings on behalf of the Private Sector Organization of Jamaica as the chair of the Innovation and Digital Transformation Committee. It's my pleasure to welcome you all who have made a choice to attend today's session here in partnership with Symptai Technology to hear about what does digital currency mean for businesses. Very, very important topic. Digital transformation in Jamaica is not just a nice catchphrase, but a critical component of creating sustainable economy for Jamaica. This is something that PSOJ believes in wholeheartedly. This is why in 2020, the Innovation and Digital Transformation Committee was formed with a goal to focus on current and emerging digital practices that can increase efficiency and productivity in the public and the private sector. So the organization has this committee. We've been meeting monthly, and we have done a number of things. Some of you may have heard of the whole idea of ends, and amongst a number of other things that, that we've been working on. Matter of fact, next week, Tuesday, we'll have a meeting, exciting meeting with a number of stakeholders who's going to be updating us on some movements forward. So the global shift to cyber, to cryptocurrency is one which we have been watching for a while, with so many of our neighbors and trading partners conducting commerce in this type of currency. Additionally, after the announcement in this year's budget presentation about the Bank of Jamaica will be introducing their own CBDC, central bank digital currency, the time is right, for us to have this kind of discussion for folks to understand what's going on, right? And so, we're very, very happy that the PSOJ member and, our friends at Symptai have stepped up, and Caston Brown, IT consultant at Symptai Consulting, will enlighten our darkness around this massively important topic. So I look forward to hearing all the exciting news that he has to bring. Thank you very, very much, Symptai, for doing this. Thank you very much.
You are very welcome, Chris, and thank you to the Private Sector Organization of Jamaica to continue to bring topics like this to the fore and to be able to advocate for all the enlightenment we need as members of the organization. So just some quick housekeeping. We do know that this discussion will invoke quite a bit of curiosity, and we expect lots of questions. We ask that you hold those and type them in the chat. There will be a 15-minute slot allocated for answering of those questions at the end of the session. All right, so I'm gonna go ahead and just share my screen before we get started. So Chris did mention that Claston Brown is a senior IT consultant at Symptai Consulting. He's also certified in risk management, information systems audit, and he is a very curious man himself and has done quite extensive research around the topic that we're going to speak about today. So we're going to try to keep the conversation relevant. There's lots we can say, but a limited time. So hopefully we'll be able to touch on all the areas of interest today. So without further ado, I'd love for Claston to start us off by telling us, what is digital currency and what does it mean for business?
Good morning, everyone. Thank you wholeheartedly for everyone who joined us this morning. I know you had so many other things to do, but you decided to join us. From this discussion, what we want to ensure is that we basically demystify what digital currency is, remove some of the misconceptions, and have individuals speak more confidently and know how to approach concepts such as digital currency. Now, digital currency is a broad terminology utilized to describe digital payments primarily. And let's go through a brief history of what money has evolved from. So first and foremost, we were in a barter system. This is where if I wanted 2 pounds of carrot, for example, go to Farmer Joe and I would bring a shoe or a shirt or maybe a brick to Farmer Joe and hope that Farmer Joe wants my brick or shoe in exchange for a carrot. The difficulty of this is that if the farmer didn't want my carrot, I could not get it. If the farmer didn't want my shoe, I couldn't get the carrot. So that caused some inherent challenges. We then evolved into precious metals being exchanged for goods. The challenge with that also was that the precious metals were a bit too heavy. So it was difficult to transport and carry to wherever you wanted to do a transaction. This was minimized into coins. So gold coins were being utilized to do transactions. The magnitude of having so many gold coins caused individuals to store them at vaults, primarily banks. And whenever someone would bring a coin to a bank, they would give you what is called a receipt, or another name for that would be bank note. And that would be redeemable for any amount of gold that was outlined on the banknote. We then evolved from that into credit card payment systems, where this could facilitate individuals who could make payments and then reimburse the credit card company at a later date. We are now at the digital currency stage, and this is primarily dominated by the cryptocurrencies, Bitcoin, and this has caused a huge adaptation, primarily because of the increase in value that has caused individuals to seek capital gain from that. So that's a brief history of how digital currency has evolved. So the primary question, what is a digital currency? Digital currency is a virtual asset. It is not tangible. You cannot touch it. So that's the difference between it and what you would call probably physical cash. And the difference between digital currency that covers cryptocurrency and CBDCs, the difference between these is that cryptocurrency is decentralized. What do I mean by this? Decentralized nature is computer systems. So the blockchain that is backed by the cryptocurrency, you have multiple computer systems across the world, and these contribute to what is called a blockchain. Now, a blockchain, in simple terms, is a public ledger. What does this do? This records transactions and show that in an instance where I would send 1 Bitcoin to CoreJane's Bitcoin wallet, it would be recorded on the blockchain. However, before this can be recorded, it has to be verified by the other information systems within the blockchain. With a CBDC, this approach is centralized. So instead of having multiple systems distributed globally, there's a central authority that determines when a CBDC is minted, who it's issued to, and how the transactions are verified. You were wanting to say something, Georgia?
Sorry, the host muted me by accident. Let me just go back one, Sasan, because I know there is quite a bit of controversy around Bitcoin and what that actually means. Can you shed some light on why there is such controversy around that topic in and of itself versus the CBDC, and how we can have assurances in each type of digital currency? Okay, well, all right. Cryptocurrency has some inherent risks, primarily the regulatory aspect of it. What do I mean by regulatory aspect? In the general term, there are requirements such as KYC compliance. What does this do? This is a control implemented to mitigate the risks of money laundering. So cryptocurrency primarily allows persons to launder money through illicit means. It facilitates illegal transactions. And if you are in tune with the IT space in terms of cybercrime, a lot of ransomware has been attacking persons' organizations, and the payment method chosen is Bitcoin. So again, because the payments can be made in Bitcoin, it is anonymous. So you can't tell who the money is being paid to or who it's coming from. So that's one of the key challenges why a CBDC was implemented, to kind of remove that risk of fraud, money laundering, and also to provide a more innovative, a more efficient, a more secure transaction through the use of CBDCs. Okay, Claxton. So I'd love to spend some time to talk about the CBDC and what does that mean for how money will be managed. Okay, all right. Let's cover the fundamentals of a CBDC. Just to distinguish between a CBDC and the cryptocurrency again, primarily a cryptocurrency is not backed by anything. So the value is speculative, so to speak. With a CBDC, this is really backed by a central bank or a government. Also, it facilitates identification and traceability of the transactions. Whereas with a cryptocurrency, transactions are anonymous. With a CBDC, you can trace the transactions. And also the central authority is the distinguishing factor between a CBDC and a cryptocurrency. For example, John goes to a cryptocurrency exchange. He probably won't need to provide any information at all to get some cryptocurrency. So John could, for argument's sake, get some money through some illicit means, takes to a cryptocurrency exchange that for some Bitcoin. Illegal money into the system, he now has cryptocurrency. With a CBDC, some minimum KYC compliance requirements has to be met prior to an individual being given access to a CBDC. Also, what the CBDC allows is for a more efficient way to manage cash, where you'd have to pay for the security of physical cash, moving it around to various locations to ensure all your branches are, for example, an ABM has sufficient cash. Now, this can be done digitally. We're in Jamaica, not to knock any of our service providers, but we experience a lot of internet outages. In such an instance, it would be difficult for you, an individual, to withdraw your money from an ABM, so to speak, or even go to a point of sale. If the internet is down, you can't conduct transactions. With a CBDC, it facilitates offline transactions also. So in an instance where we have no internet, you can still conduct transactions at a merchant. You can still transfer money to another individual. So this kind of makes it a bit more convenient and efficient. And also the monetary and
data aspect of it. Remember, previously, if the central bank wanted to issue some currency, they would have to indicate to the persons who print the money. This would incur some additional costs and some delays in getting the money here into the island. With a CBDC, that risk is completely reduced. You can track money, you can predict what the needs might be, and you can distribute a lot easier. Also, the wear and tear that would be attributed to a physical cash that would make it look destroyed, that can be removed now with a CBDC, where it's completely digital, it's completely a legal tender. So it within itself can be allowed to make purchases. Another example, whenever you look at your bank account, because persons might ask, what's the difference between a CBDC and the money in my bank account? The primary difference is that the money in your bank account is a promise by the bank to pay you. Argument's sake, someone goes into the bank and requests all their money. That's what we would call a call on the bank, where everyone goes in and requests their money. If everyone at a membership at a branch asks for their money to be distributed to them, that would pose a significant challenge, because the bank at any given time does not have all the physical cash to pay out each member. With a CBDC, that challenge or risk is completely removed, because the CBDC itself is a legal tender. So it in itself can be used to make purchases outside of the bank. So you can see where a significant risk is removed just by implementing a CBDC currency. I hope that
Wow,
provided.
Claxton.
Muted Cape Cordian, not hearing you. Not hearing you, Cordian. Not hearing.
Are you hearing me?
Yes, I'm hearing you. No, I didn't hear anything.
Oh, I was talking. Okay, my apologies. I didn't realize my sound was off. So I was saying that everything that you've just explained, it sounds great, but if I'm a business person, what does digital currency or the CBDC actually mean for my daily operations, for the average business?
Okay, for the average person, business, for example, they would ask that question, which is a very important question. What I can say is, for your business, with the implementation of a CBDC, the technology behind it will allow for faster transactions, more efficient transactions. Previously, say you wanted to make a payment to your supplier, you would probably have to write a check or ask your bank to wire that supplier. With a CBDC that's implemented, all you would ask for is the supplier's wallet address, and you would send that transaction, and it's settled almost in real time. In seconds, your transaction will be settled. So from an efficiency perspective, definitely there are benefits to be had from the business. Also, the benefit of a CBDC is putting in the unbanked portion of our society. Because to be honest, there are persons who do not have a bank account or a traditional bank account, because we know the restrictions in terms of getting a bank account, the minimum requirements that you need, the minimum amount of money that you need. A CBDC helps to remove those restrictions and allow everyone to participate in our financial environment in the country. So I think that would also enhance the amount of money being spent in the economy and also strengthen our financial sector.
What are the challenges now that we face, Claxton, with the unbanked?
All right.
Meaning, why is it so difficult for them to do business?
One is to open a bank account, you need certain documentation. You need verification from a JP. You need a reference from someone. You need a reference from also an individual that is at the bank who has a bank account already. And I think the primary restricting factor is just the sheer amount of money you need to maintain an account. And if you do maintain the account, the amount of service charges that are sent to your account, if you leave your account there for an determined amount of time, it might be flagged as inactive, and in doing so, you might lose money. So that is one of the challenges that a CBDC might help to alleviate. So the requirements, the restrictions, it's a bit easier to get a CBDC account because, again, the implementation of the CBDC is also important. I definitely forgot to mention that. The implementation of the CBDC determines how it is used in the environment that's been implemented in. The two primary implementations are wholesale implementation. What does this mean? This means it facilitates interbank transactions. So Bank A can send money to Bank B. And then there's also the retail implementation, which allows for businesses and individuals to conduct transactions using the CBDC. And based on the information available now, I think the central bank is implementing a hybrid approach where while individuals and businesses can use it in a retail mode, the management of the accounts or the administration of the account will be done by deposit-taking institution and approved payment service providers. So you can see a bit more accessibility for persons who would previously be unbanked. They can now be involved in the economy in a meaningful way. Oh, there are so many things to cover. Another thing is the data aspect of it. What this allows is for you to have this enormous amount of data that can tell you how spend is being done, spending, income, expenditures. This data can be used to facilitate so many other things. So a company could use the data and do an in-depth analysis on how money is moving within their business. And based on that, they can make informed strategic decisions to enhance their companies further.
Pastor, when you start to talk about immense amount of data, I start to think about privacy issues and challenges and how we consider all of that with the collection of all this data.
Well, privacy is a big buzzword now. I know that due to the advent of GDPR, our own Data Act here locally, privacy is a major concern. The good thing about a CBDC technology is that it allows for privacy to be considered. So it can be implemented in a way that an individual's data does not become apparent. However, because of the KYC requirements, the implementation can be modified. So the flexibility of it is there, where, for argument's sake, let's say the central bank says for transactions below 10,000, there's no data being shared. So you do your transaction completely anonymous. However, transactions above a threshold of say 500,000, 1 million, let us see exactly who is doing this and also what the purchase is being made for. So there's some flexibility around that, but primarily the privacy concerns can be remediated with the implementation of a CBDC. It all depends on how it is implemented and based on also the policies of the country that's being implemented in. So that determines how these implementations are done and how the privacy considerations are made into the configuration.
Okay, all right, fair enough. I'd love to move on to something else, which is, I'm sure, something of concern to many of our audience members, and that is how can businesses prepare to transition to this digital future of money?
All right. I would say based on what I'm seeing in the market, the primary preparation method would be first and foremost to improve your infrastructure. So your IT infrastructure, it is important if you're planning to conduct these transactions or hold CBDCs at your businesses, it's imperative that investment is made into improving your security posture. This means conduct audits, do penetration testing, do security assessments, understand where the loopholes are, understand that if there is a risk here, implement controls to mitigate it. I'm not saying that companies should spend all their money on improving infrastructure, but what I'm saying is that you should at least be aware of where your weaknesses are. If you're aware, that can help you to be more proactive, where you implement controls to at least monitor a particular vulnerability or weakness until you have a chance to remediate it completely. So first, improve infrastructure, your IT infrastructure, ensure your user administration processes up to par, your change management is up to par. All the various aspects of your IT infrastructure has to be improved. Also, what I would say is to do an assessment. How does your current product and service offering, how can this be enhanced by a digital currency? What were the previous restrictions that were primarily due to physical cash? What prevented you from conducting particular business processes? Were these hindered by physical cash? How can this be enhanced by a digital currency that is more efficient, more convenient? The transactions are definitely cheaper compared to previous methods. So it's just to do an assessment of how it can improve you and how you can innovate based on this current technology that is being implemented now.
So in terms of how businesses prepare their customers, because Claxton, the fact of the matter is we do live in a cultural context where this may appear to be very, very scary to some persons, and there is a lot of fear around it. So in addition to businesses preparing their internal operations to be able to operate in a secure manner, what about their customers? How do we prepare our customers for the concept of even operating using a digital currency?
Well, preparing customers can be a bit simpler because the only major change here is that interacting with customers in terms of conducting transactions, they're making purchases, is that it will now be completely digital. So to prepare is for you to inform them, to say that, guys, previously you would buy this service via giving me cash or a check. No, this can be facilitated via a digital currency, a CBDC. So the only major change is how you interact in terms of payment transactions, retail transactions. That's the only main difference with the interaction now with a business and a customer. Easier payment methods, more efficient payment method, more cheaper payment method.
So the big question on my mind is, what about physical cash? If all of this actually rolls out as you've described, what happens to our current legal tender? Will that become obsolete?
This is a very, very good question, Cordian, and a very important one. I can't make any bold predictions, but what I can say is the data shows that there has been a steady decrease in cash transactions. I think the country with the highest rate of cash transactions now for retail purchases is Japan. And even Japan is decreasing based on the cash use. So what I can say is that the use of cash will be less as we progress further. And to be completely honest, based on how the technology is evolving, it will be less convenient to conduct transactions with cash. I can say that much. It will be less convenient because imagine I'm not coming to make a purchase that is probably $2 million, right? Compare that with me bringing $2 million considering security circumstances and me having $2 million in a CBDC account. The benefits there are quite apparent. So the transactions will be a lot easier and a bit more efficient in doing so.
Yeah, and certainly we've seen the minimal amount that has now been, well, in terms of restrictions around cash transactions, we are already seeing that, where that has been limited quite significantly because nobody wants to walk around with $2 million of cash on them. So this should be a natural progression, given what you described at the beginning about evolution of money. So hopefully it will be as simple as you described.
I don't think it will be as simple as I described. Again, there are so many uncertainties. And the next question is a very, very good question. What does this mean for businesses?
Right.
Again, because the data is limited, because this is a new innovation, a new technology that is just being implemented, it would be very difficult for us to say what will happen 5 to 10 years from now. But what I can say, there is a need for more efficient and cheaper payment transactions. For us to be evolving and be more innovative, it is imperative that payment transactions are reduced. Within the last 2 to 3 years, electronic payments has increased significantly, primarily because the COVID-19 pandemic. And this has coincided with the increased market capitalization for electronic payment firms, such as PayPal, such as Square, Cash App. Everyone knows about these applications, and their market capitalization has been significant. They are worth in the hundreds of billions now, and that is due to the adaptation of electronic payments. Another point to note is that the fundamentals of money is sum. This is the unit of measurement. It is also the method of exchange, and also it should hold value. If these characteristics are maintained for a CBDC or a cryptocurrency, I think the benefits can be more or greater. But again, it's just too early to tell. But what I can say, as the data becomes more available, we will keep the market informed and all the relevant stakeholders about developments as they progress.
All right, that was quite a mouthful. Thank you, Claston. We do have a section now for questions, and throughout the presentations, I have seen them coming in. So I'm just gonna go over to the chat and see what persons are interested in us answering. Okay, so I see we have 3 questions in the chat so far. The first one was from Tisha Fraser, which says, does that mean that the bank cannot use CBDC to place on investments, and in brackets, overnight facilities, purchase bonds, or lend to customers?
Repeat that question.
I think it was probably coming out of something you were saying at the moment, but it says, does that mean that the bank cannot use CBDC to place on investments, overnight facilities, purchase bonds, or lend to customers? So I'm not quite sure in what context this question was asked, but perhaps, Claston, we can speak to how the CBDC is used to make investments, purchase bonds, lend to customers, etc.
All right. Well, now primarily we're in what you would call a pilot phase. So I guess some of these questions, which is a very important question, these questions are being answered now via pilot projects. It's difficult to say specifically if that's a possibility. However, I don't think it would prevent the purchase of bonds. But again, because I'm not within a banking environment to see how it's being utilized, but I think some of these questions will be answered as the BOJ releases more information on how the maneuvers around this will be done.
Okay, thank you, Claston. I see a question here, but I think we've answered this quite comprehensively, but perhaps I'll ask it, and if there's anything we neglected to mention, we can do so now. What do you see as some of the key advantages for 1, financial institutions, and we can take these one at a time, Claston, but 2, businesses, and for 3, customers going forward? So I think the way this is structured is very helpful. So let's take financial institutions first. What are some of the key advantages?
All right. For a financial institution, the primary advantage is, all right, the same scenario I gave before, where the money you see in your bank account, it is not legal tender. It is a promise by the bank to pay you this amount if you go in and ask for it. With a CBDC, it is a legal tender. So, for argument's sake, if the bank crashes, you still have your CBDC. And I guess the amount that is insured, you will get that in return. but the risk of having to pay out that money to you, that risk has now been transferred to the central bank. So from a financial institution perspective, that is an alleviated risk. So argument's sake, someone has $1 million in their bank account. So they decide, pardon?
No, go ahead.
Okay. Someone has $1 million in their bank account. They decide to transfer 500,000 to a CBDC account. So you have 500,000 in your bank account, 500,000 in your CBDC account. Argument's sake, the bank crashes. They cannot give you your 500,000. The only amount that will be certain that you will still have is the 500,000 in your CBDC account. And this is because of the characteristic of a CBDC, which it is a legal tender. So in terms of risk, that is one of the risks that would be alleviated from the bank. What was the other question?
Well, first of all, I mean, it's just really dawning on me, just the risk that the central bank has taken to introduce. I mean, mind you, it has a number of advantages, but they too are taking on quite a bit of risk in introducing that to the market. So we haven't done so before, but we do want to take some time to commend the central bank for making this very bold and necessary step to introduce the CBDC to the market, because it does present so many advantages. And we wanted to move on to businesses. So what are some of the key advantages? I mean, you touched on quite a bit of them before, but just to kind of give us in bullet points, what are some of the key advantages to businesses with the introduction of the CBDC?
Primarily, faster, more efficient payments.
Yeah.
That is the key advantage. The efficiency of the payment and the cost is significantly reduced. Let me give another example for probably, say a cambio. If a cambio has multiple locations across the country, imagine the immense cost to transfer physical cash to these locations for persons to come and purchase money. If a CBDC was implemented, individuals would probably have to have their money in CBDC. So the cost in sending and managing the money around this business is significantly reduced because it's all digital now. So that's one of those are some of the two key benefits of implementing a CBDC and how it can impact and benefit business.
And what about customers? That was the third one.
Customers, man. This is the important part of it. I mentioned the unbanked portion of the economy. Farmer Joe that lives way up in the mountain, he doesn't have all the things he needs to have a traditional bank account, but he still has money that he needs to spend. Now he can go to a authorized payment service provider or a deposit taking institution, provide his name, probably his address, and he's given a CBDC account. So he can now go back to his farm knowing that he has his money well secured on his wallet and he isn't subjected to anyone robbing him. So the benefits from that is quite clear. And also just the sheer convenience of having to send payments. I can sit here and send money to Cora Jane, who's in Montego Bay, very easily without opening my bank account and sending you a transfer that might take some time in a scenario where the money is needed immediately. A CBDC settles so fast. So within seconds, you have the money and you can use it immediately. There's no settlement time there. So, and again, because this is so new, there are other things that might be apparent that we don't have data. And I don't like to speak speculatively. I like to speak from a data perspective. So as it progresses, I will provide more information.
I'm sure you will, Claston. I wanted to challenge you, well, maybe a little bit, on what you mentioned about just the instant transfer of money, because so many institutions, and this is a question coming in from Tanisha Blake, several financial institutions invested in developing mobile money platforms, because I'm sure speed was a catalyst or motivating factor for that. How is CBDCs related, or How is CBDC related or differ from these offerings that the financial
Meaning
institutions are now investing in? Mobile money platforms, yeah.
Okay, so again, the difference between these and CBDC is that the mobile money, again, you know, once it's digital, it's a promise for you to get paid. So if, for example, I send a mobile payment to an individual and they go to a location to have it converted to physical cash. If that location doesn't have the physical cash to give them, that money cannot be converted.
Right.
With a CBDC, it is a legal tender. So it can be used to make purchases anywhere. So if for whatever reason, the mobile payment platform goes down, you can still do transactions with your CBDC because it facilitates offline payments. So that's where the difference is with a traditional mobile payment platform and a CBDC platform.
Right, because you're still relying on the availability of cash in order to complete your transaction. Okay, great. One other question. Will end users see a difference in using their debit card versus digital money?
That's a very good question, you know.
Right.
Yes, I think the primary difference is what I mentioned earlier is, all right, consider a scenario where the point of sale goes down. There's no internet. You can't use your card, you know.
You can't use your card.
Where we have been held hostage. We can't get our money because the internet is down, the ABMs aren't working. With a CBDC, that risk is alleviated because you can still do your transactions with a CBDC, and also the transaction cost is significantly lower.
How is that though, Claston? I mean, I don't want to go too technical into the architecture, but how is it that the CBDC allows or facilitates transactions without the internet?
Okay, so at each payment service provider that will be offering payment via CBDC, the architecture of the CBDC allows for the payment service provider, it would be something similar to a point of sale, but not in the traditional sense. It's pretty much digital, but it allows for the verification of the transaction. And the moment the internet comes back online, there's a communication between that local device and the central bank. If this transaction was conducted, it can be verified.
Okay. So and what about the amounts?
That would be the only restriction, where if it's offline, then the amount that you can transact with is reduced significantly, because again, we're still trying to manage risk here. So you wouldn't want someone to be conducting $1 million transaction offline. So there might be a reduction in the amount you can spend, but you can still spend. Whereas compared to a debit card, your ability to spend is completely reduced because of the dependency on internet connection.
Okay, we have another question. So I know we're not accountants, and we certainly are not, so we don't know everything. Yeah. But will digital currencies reduce the customer deposit liabilities on the balance sheet of banks?
Yes.
Customer deposit liabilities. It will? Yeah. Okay.
Yes, it will. Because again, if I give 100,000 to the bank and I convert 50,000 to CBDC, the bank now has 50,000 less to give to me. So they aren't obligated to give me 50,000, 100,000 anymore. They can only give me 50,000, and that will significantly reduce the risk exposure for the bank. Again, whether this is a good or bad thing, it's for the banks to decide.
Yeah. Okay. So this is from Keela Ray. The last question, sorry, I like to say who it was coming from. The last one was from Colette. Colette J. Smith. Oh no, Colette just says, excellent, thank you. You're welcome, Colette. From Keller Ray Miles, based on Claston's explanation, having risk to protect, does this mean that there isn't a need for JDIC protection of these currencies?
These questions, I must say, that they are excellent questions.
They really are. They really are good questions. Makes for good discussion.
Based on the because the CBDC is a legal tender, I do not see the need for the insurance of it, because again, it is a separate unit of money that, again, the reason why your money is insured at the bank is because if the bank goes into insolvency, then at least you will get a portion of your money. Because again, the money at the bank in your bank account is a promise to pay. So because it's a promise to pay, you have to insure that promise to ensure individuals can get a payout. With a CBDC, there is no need to insure it because it in itself can be spent at any location that accepts a CBDC currency.
Right. Okay. For less risk protection of these currencies. I think this is a similar question. Based on Claxton's explanation, having risk to protect, does this mean that there isn't a need for less risk protection? So I think we spoke about that for these currencies. Okay, I just want to make sure that I've gotten all of the questions here. We have 6 minutes left. So we have answered all the questions in the chat. So if anyone else has a question, please go ahead and type it in the chat so we can make sure we cover everything. We want this to be useful and fruitful for everyone. So if there's anything that you're curious about that we haven't covered, please go ahead and ask that.
And just another point to note is that, remember, again, this is a very new development. So we are still learning. There is a lot of uncertainty, and go along will understand. And remember, the central bank will understand the various aspects of implementing a CBDC, because I'm sure there are many other risk factors that we haven't even begun to consider as yet. So it's new, we're still learning. It is interesting to see how this will develop further. But I can say there are a lot of possibilities for innovation. That's what I can say.
Absolutely. So yes, there is one more question from Deandra Tulloch. Nice name, Deandra. Would you advise me to move my savings from the bank to CBDC? Claxton, do advise us.
I will not provide any financial advice. I am not, guys, I'm not a financial advisor.
Deandra.
I operate in the IT space, IT security, IT audit, information systems. That's my purview. The technology behind the CBDC, that's what I understand. As it relates to the financial aspect, I don't understand it. So
Claxton is staying in his lane, Deandra.
Yeah,
and he does advise us when we force him, but yes, we wouldn't want to do that today.
Yeah, I'm not a financial advisor, guys. Remember.
But very importantly, Claxton, you mentioned that this is a developing, there's something new every day. And I'm sure we as consumers, as business owners, business operators, etc., we need to keep in the loop. We need to educate ourselves, make sure we're enlightened. What would you suggest in terms of avenues, channels for us to get the right information? Because there's a lot out there. How do we dissect what is useful and valuable? And how do we keep up to date?
Okay, so in our own jurisdiction, which is Jamaica, the primary source of your information should be Bank of Jamaica. They are the ones implementing currency. Keep abreast to their website, their news releases, read everything that they tell you, because they are the ones in the know currently. They are the ones conducting the pilot project, and they will release information as it progresses and develops. So I would say for a verified source, stick to the Bank of Jamaica's website.
Right. Okay, that was good. We do have another question. I think I can answer this one because I feel like I've learned quite a bit. So if a financial institution collapses, per se, which we have seen before, does this mean that the CBDC remains safe and secure?
Yes.
It does. Yeah. And
You're muted, KJ.
Yes, it does. It does retain its value.
Yes. Remember, it's backed by the central bank.
I feel like somebody's going to ask, so what if something happens to the central bank? Then we have a whole other problem.
Yes, that's
a whole other.
Yeah, I can't speak to that.
Okay. All right, everybody. So we are at 10:58. I don't see any further questions. So I will wrap up at this time unless my moderators have any other instructions for me. So Boy Claston, thank you so much for these are discussions we have all the time as colleagues at Symptai with our clients, and I'm constantly learning. So thank you so much for sharing with us so openly today. It was a really, really fruitful discussion. And I wish to thank the PSOJ for having us, for giving us this platform to speak.
Yes.
Absolutely, and for bringing awareness. Yeah, it really is. It really is. And thanks to Chris for bringing greetings at the beginning of the webinar. Thanks to you guys who took the time to attend. I know that there are so many priorities pulling at us every single day with all of the commitments we have. So we really do feel honored that you chose to spend this hour with us. And we hope that it was indeed fruitful for you.
And you can reach out to us if you have additional questions. I'm sure
sure.
is willing to take those calls.
Yes, I can do a shameless plug. So Symptai Consulting, we're always happy invite everyone to come and talk with us about various challenges that they're having in their business. We're happy to support in any way we can.
Yes.
So I'll just leave it there. I won't put our list of services, just give us a call. All right, everybody, enjoy the rest of your day and keep safe. And thank you again to everyone for being with us.
All right.